There is a new IPO which is opening today. Of course, it's opening for subscription at this point of time. So from today to 1st of July, that's today and the next couple of days, one or any investor can go ahead and apply for that company. Let's get in the management at this point of time. Quess Corp is coming up with the IPO to hit the markets to list. Here are the IPO details. It's about 310 to about 317. That's the price band. The management is now joining us on the phone line. Mr. Ajit, CMD and CEO at Quess Corp Limited. Sir, congratulations for firstly coming in for your company, getting the benefits of listing. Just wanted to understand that what essentially Quess Corp does. Why should one invest into this company? What are the positive triggers that are there for Quess Corp?
Thank you, and happy to join you this morning. Quess Corp is a business services supermarket. We identify all the indirect costs of companies which are related to the non-core activities of client organizations and outsource them so that our client organizations are able to concentrate and focus more on what is core to them and build more efficiencies in that. As a result of which, we've got now 4 verticals. We've got 4 clusters of business, so to say. We've got business in technology, in human resources, in facilities management, and industrial asset management. These clusters, if you notice, cover broad swathes of the Indian economy. In an economy that's growing at about 8%, in markets, in each of these verticals...
Just if you could give us a little bit more detail, sir, in terms of, suppose I had to start a company and I'm starting some taxi app, let's say, and what would I come to you for?
Great. So if you're running a taxi app company, as you were saying, the first thing is that you will come to us for recruitment, where you want to hire people directly for yourselves on a permanent hire basis. Second is you will identify those sets of tasks that you think are non-core to you, maybe accounting, maybe administrative jobs, maybe logistics, maybe marketing and communications, staff welfare, etc., where you think these jobs are not core to you, and you will outsource those positions to us. So we will hire positions for you, people for you for those positions, and you will take them and work them at your site. Sometimes you will say that these jobs are completely non-core, you can even supervise them for you. That Quess can even supervise these jobs. After people, we do compliances, payroll management. So on a month-on-month basis, we even run the payroll and the benefits administration for all the staff that you have on your rolls. Then you take your office space. In your office, you have to maintain your office space. Office space maintenance means soft services, hard services, pest control, security services, facade cleaning services, parking management, transportation facilities for your staff, food and beverage services, etc. All of which we can take care for you at the facilities management level. Assuming you have some equipment that you need to take care of, assuming you replace your taxis with maybe some industrial equipment like power plants or winding equipment or presses, lathes, etc. We do the industrial asset maintenance of these machines, and also the physical maintenance of factories and premises for you. Lastly, we have a technology vertical in which we write code, develop applications, and also send people on staff augmentation to your company. So you can see the number of things we do for an organization. Our purpose or reason of existence is actually to take as many non-core jobs away from you and to get a higher wallet share of what is indirect activities for you.
But sir, obviously it would only make sense for me then is if you could do it cheaper than me hiring these people directly, right? Or undertaking these services myself directly. That seems to suggest to me that you would have to have great economies of scale to be able to maintain margins. Good
point. We've got about 120,000 people that we employ today. So you'll notice we've already built that scale. We're perhaps
20,000 people.
120,000 people, that's right.
These are permanent employees, or many of them are temporary contract employees as well?
3,000 of them are corporate staff working in our office, and 117,000 of them are associates, what we call them, on deputation, working with full benefits at client premises.
Okay.
So the reasons of outsourcing such activity often is not cost alone. Cost is incidental to the whole process. So the efficiencies that you derive by not having to bother about a section of these jobs is really the driver for client organizations to be able to give these non-core tasks away to us. So while costs are good to have a discussion around, it is not the central driving factor to outsource or not to outsource.
It's also that you don't have to hire people and you don't have to go through that entire process of hire and fire if you're doing badly, right?
Yeah, that's right.
But costs would be of a certain issue, right? Because suppose I have Quess Corp coming to me and offering these services, and there's someone else who comes to me. Yes, of course, it's the brand and the goodwill that Quess would have built up that I would look at. But if I'm a listed company and I have shareholders breathing down my neck, I would obviously have to choose someone who also gives me some benefit in terms of cost. So I come back to the question. How do you maintain margins? What are your margins? What do you look at?
Yeah, so our margins have grown over the last 5 years from being up around 4 to 4.2% to maybe a little in excess of 5% today. This margin expansion has taken place because we're able to amortize our cost base over a larger operating base today, one. Second is, with the infusion of technology in a number of the business processes that we deliver on, we're able to automate a number of these activities and reduce the element of repetition and human intervention, which will increase the cost base of delivered service. The third thing is that we are also working in terms of a commercial construct of the company, as in reducing the working capital requirements of the organization. So we've been able to reduce the DSO from what is effectively 60 plus days to about 40 plus days today, and that is a big contributor to increasing the free cash available to the organization.
All right, so these are debtor days. What days are you talking about here?
These are debtor days, that's right.
Debtor days. And I'm assuming, since you said that you're able to amortize over a longer period, these are EBITDA margins you're talking about. If I just look at EBIT, what would that look like?
Yeah, so our EBIT is approximately about 5%, and while our revenues have grown actually by about 52% CAGR across the last 5 years, our PAT or earnings has grown by 81%. So you'll see that the growth in profits is disproportionately higher than our growth in overall revenues.
And you pay service tax, is it?
Yeah, we pay service tax, yes.
And there is no discount or anything here, you just have to pay the existing service tax rate?
That's right.
All right. And so what do you need the money for?
So out of the 400 crores of cash we're raising, 50 crores is for repayment of certain debts that we've got in our books, 70 crores for capex requirements in our various businesses, 80 crores for some M&A activity that we intend to engage in, and a large part of the money that we're raising is going to fund the working capital requirements of the company, which is about 160 crores, and about 40 crores we're keeping for general corporate purposes. So you'll find that the axis of the slant is towards really growth in the company, where 80 plus about 160, 240 crores plus 70, about 310 crores out of the 400 is for growth themes.
I'm looking at the market cap implied here, because he was trying to raise 400 crores at 10%, and even if it lists at issue price, that gives me close to about 4,000 crores. And I just saw, so 12-month trailing, it'll come to about 45 times your earnings. How did you arrive at that valuation?
Well, 2-3 points to the answer. The first one is that we are already a subsidiary of a listed company, so there's an implied valuation to our organization from the market cap of Thomas Cook, as it were. Right. Second is that we've done anchor placement right now, 180 crores at the higher price band, at the highest point of the price band, to about 15 investors. So we've had a fantastic reception to our issue in the market, and we're happy to state that this price has been accepted by institutional and sophisticated financial investors. And the third is, if you compare us with market multiples across the world, for a company with this rate of growth, margin expansion, ability to absorb M&A activities across the last 5 years, we've done 9 of them, and the multiplicity of verticals that we've got, we believe is a fair price.